YouTube.
Yes, indeed. YouTube.
Hey,
everybody. We're back live. You still working out things on your end, or are you good? I can entertain the folks, man, until you're ready.
You're the entertainer.
We're just gonna boot him to the back real quick. All right, there we go. That works. I hope you all are doing well. We are just coming with a end of the year chat with my guy Benjamin from the ROI channel. So as you begin to chime in, be sure to drop a comment, drop a like, hit the subscribe if you haven't subscribed yet. But just looking forward to getting to this chat where we're going to talk commodities. We're also going to talk about our worst financial decisions we've made in 2023. And we're also going to talk about 2024 predictions and where do we see markets going based off the macro and micro information that we consume on probably a daily basis. I don't know if Ben probably pursues it on a daily basis as well, but I'm gonna go ahead and bring Ben back in. So let's get it. All right, there we go.
Hello, guys.
Hello. So let's see, we got a comment, Wavy McFly. I don't know why, but I love that name. I appreciate you chiming in with us today. So yeah, how you doing today, Ben?
I'm doing very well, Daryl. Hope all the viewers and listeners are. Hope you had a wonderful Christmas, Hanukkah, and end of the year celebrations, and looking forward to a prosperous and happy 2024. How are you doing?
I'm doing good. I feel like I've weathered some storms in 2023, and actually, I mean, I feel like I did pretty good in terms of with my decisions. I feel like all of that knowledge that I've accumulated over the years really came in and carried me through. You know, it's like almost like having LeBron James on your team or something, you know, where it's like, okay, I know LeBron's going to carry us through. So, yeah. I want to talk commodities. We're going to talk through our worst financial decisions we've made in 2023. Then obviously 2024 predictions. If anyone has anything specific that they want to us to address, be sure to leave that in the comment section. Hit the like button so that this gets out to more people. Let's see, Wavy McFly said, let's go, bruh. Commodities 2024, my magnificent 7 is gold, silver, copper, steel, palladium, and oil and natural gas.
Yes, sir.
What's your take? If you were to pick one of those commodities, which one would be your top going into 2024?
I think the highest torque probability is silver, and we don't have platinum on there, so I'd argue that platinum probably could be on there also. But I understand what the gentleman's getting at. I think if you're looking for a really torquey upside, I think silver certainly would be the one there. If you're looking for my personal highest conviction in terms of something that's going to grind it out, I think that gold will do well on the back of the US announcing they're done with this rate hiking cycle as we start to cut some rates. This will probably also mean in the short to medium term that you get some funny things happening in those crypto-y NFT type markets where people just go full speculative.
You already know. You already know. I've been dabbling in those markets, so
yeah. I'll leave that to you. But for me, out of those, I think the highest upside silver, and where's my highest conviction over the longer term? Still in the oil markets, guys. Like, I mean, we're just getting closer and closer to seeing that Permian roll over. So oil equities for me, still, if they're going to pay me 25%-ish dividend yields that I'm getting, then you know what, time to go on an adventure.
Yeah, he's very biased towards oil. You all very biased. Let's see. If I were to pick out of these 7, I would say probably gold. Um, I think that copper, still palladium. I mean, that's all still relative to the where we're at in the macro cycle in terms of like I don't know if I mean, obviously, still talk of recession, or if we're already in recession. I mean, you got to look at car production with palladium and all those different things. So you have this industrial market that's connected to that specific commodity. I think over the long term, it's definitely going to do good. I just don't have a strong conviction for 2024 in terms of palladium, copper as well. Steel, I don't know too much about. I think China produces a lot of steel or something, but I would say gold. I mean, because if we look at the gold chart, gold is about to break this all-time high. Silver is still lagging quite a bit, and so it's kind of one of these things. Like let me just go ahead and pull up the gold chart just so we can just get a visual of what I'm talking about. All right, so I'm just pulling it up here. Going to share screen. You all. So if I'm looking at gold, let's go right here. So if I'm looking at the gold chart, right, we see that gold has continuously hammered on this all-time high level and has pierced it. It had recently reached the all-time highs here recently, and
broke the
it did. Yeah, it broke above it, and but silver, I mean, when you go to silver, it just either it's lagging behind a lot, which
Yeah, that's exactly why I like it. I agree completely with the gold idea. I think that then if you look at the gold to silver ratio, I think that will start to close. Some interesting facts on silver. This is the third year in a row where we've had a deficit in the production of silver. So that's on the supply side. If you look at silver in terms of what drives the demand, it's got that extra it factor that gold doesn't, in the sense that it's an industrial metal. And I think that you've got the monetary demand, or people investing in the East, for instance, using silver as a poor man's alternative to gold. In addition to which, the industrial uses for silver, if we start to see the Fed actually follow through with these rate cuts, then you've got more people flocking to hard assets for protection of purchasing power, and you've got an addition, likely an addition in spending on solar power, EVs, you name it. Let's just call it industrial demand, which will benefit silver. So we'll
but
see. I mean,
what do you think about so when I say like gold, like we've seen gold touch its all-time highs. This is the fourth time in the last
yeah,
3 years, right? Silver is still 50% off the all-time highs. Like, and maybe silver just got way overpriced, overbought back in 2011. Like, and that wasn't a realistic price for silver because it obviously corrected. But it's just like, I mean, maybe it's just one day it's just going to rip higher or something. But it seems like we keep hearing this narrative where when gold hits close to its all-time high, silver's going to follow. Silver's going to follow, and then silver just it's
with a
still.
lag. Yeah, I mean, it does have a lag, certainly. And I know Rick talks a lot about it takes a while for people to really see a gold bull market take place. And towards the end of that market, you see silver just go nuts. And that's when people decide, hey, I've had enough of gold. Silver looks relatively cheaper. I'm gonna move some capital into silver. And the market cap, or the size of the silver market, is so small, all that capital just flows in, and you get, as you can see on your chart there, the verticality of those moves to the upside are just like it's like a rocket. It
Yeah,
really is.
it is for sure. So are you more silver and gold equities, or physical?
It's such a good question. I'm in the process of rotating out of some physical gold. Where will I put it is the question. So if you look over the previous decades where we've had a lot of inflation, The royalties have outperformed, and they outperform in downtimes as well. So royalties are the safer bet. I own some Wheaton. I own a little bit of Franco. I'm looking to get some real purchase on the like silver equities, something like I used to own Fortuna Silver, but it just you're just dealing with so many things in the silver miners. So I'm looking at maybe some call options out of the money on the SLJ index, where you just have the index. If silver producers do well, then I'll get my talk from the options. It's tricky. It's tricky. So personally, I'm currently mostly in bullion. I'm trying to rotate that into royalty plays. And if anyone knows of a really good junior, let me know, because I'm looking, but I don't know. This is where setting up your portfolio helps a lot. And the reason I talk about the dividends from oil is it's like it gives me an extra call option every year. Like every quarter when I get paid, then I have more cash coming into the account. And if we have a big sell-off in, let's just say, silver juniors, well, all of a sudden I can rotate some of those dividends straight in there. So it gives me extra optionality. But honestly, I think that you could see silver double in short time, get back up to that $50 an ounce level. Certainly, given the expansion of the money supply, the 3-year deficit in the mining supply of silver that I mentioned, particularly in Mexico. Mexican silver production is way down, and that's extremely important for global silver. Everything we've seen happen with Panama over the last few months with the first quantum
That's why
fiasco.
Franco Nevada got hit. I mean, when you look
Yeah,
at when you look at this chart, which I bought Franco Nevada when I mean they were sitting
yeah,
at what, 103 or something. I think they touched 103.
yeah.
But when I saw that news, I was at the New Orleans Investment Conference, and a friend of mine there was just like, "Man, did you see Franco Nevada? Like it just started selling off, and it was at about 117 then, and I didn't touch it, and then I saw it hit 103, and I was like, huh, yep, I'm getting in. So
Yeah.
yeah, were you in before that drop or after?
After, I believe, if I held shares, it was only a very, very small amount, like I don't know, a 10 basis point weighting
Mhm.
in my eToro portfolio, just so I could keep an eye on it, because I always want to buy more of it. I just was waiting for a price decline. And so their interests in Panama were, I mean, it was way oversold. I believe their interest that made up about single digit production, and the thing sold off like 30%, 35%.
Yeah.
Uh, so for me, I thought, well, this is a great chance to add to these things,
Mhm.
because the margins are so good on these businesses that, if you get a gold bull market and you've got a little bit of patience, it compounds and compounds like no other.
Yeah. One thing I've noticed is like the because I've been more bullish on gold. I mean, because I think that silver can run. I own silver, but my conviction is like a little bit less on silver, because obviously we see central banks are buying gold. That's just a non-debatable. Like,
Absolutely.
and
Absolutely.
so that's like one piece, and then also, I mean, when you're looking at I mean, silver it will run when it runs, but it's just like I know like there's a big echo chamber with silver bugs, right? Um, People are like, silver's going to the moon, silver squeeze, Wall Street silver, like
Yeah.
you get all
And I've
these.
I've been part of that before. I've been in there and got caught up in it, and it can take so long for your thesis to play out. It really can.
For real. So
Yeah.
yeah, so I'm kind of just I've sold quite a bit of silver. I had way too much silver for a little while, and then now I'm like getting more into. I had to get a real balance of gold and silver, but then I also had to sell both of them because they were just a huge um, portion of just my overall net worth and everything. And so, so like I was like, Rick told me, he said, "Man, you need to be investing in your business and building more income. In that way, you have way too much like gold and silver." So I started, I started selling it all. I started selling some of it off.
Fair enough. One comment I realized recently is, people have been a little bit upset with, or bored with, the price of gold and silver, but that's if you're looking in US dollars. So in Aussie dollars, the silver bullion I owned as I was trimming, I was I'd done really, really well. The price was at all time, well, not all time, but close to all time highs when
Yeah.
you account for the currency exchange. And I think that's where bullion is good, because it's very difficult to work out differences between currencies. Although I want to make a comment on that later. I think if you just own something tangible, it gives you, there's a lot of forgiveness there in terms of being able to protect your purchasing power.
Mhm. Yeah, exactly. Yeah, because I mean, gold and silver has hit all-time high in multiple different currencies. I mean, even if you're looking at the Argentinian peso, right? So yeah, for sure. All right, so I want to jump over to oil. I want to show this article that I just pulled up. It says that, let me just pull it up. It's pretty. It's gonna be interesting. It seems like this narrative is kind of coming back, so I want to let me grab it right here. Boom. Biden administration issues final 5-year offshore drilling plan. All right. So we see the Interior Department announced its final drilling plan for offshore oil and gas leasing over the next 5 years on Friday. So it's talking about how many acres they're required to lease, and there was some I was trying to find this. The American Petroleum Institute criticized the plan as a step in the wrong direction. Simply put, this final 5-year program fails to meet the energy needs of American people and could threaten to increase reliance on foreign energy sources. So I don't know if this is part of like the election coming up. Biden got to like, appeal back to his climate buddies, like, and come back alongside of them, like, hey, come alongside of me. I got your back. This is only going to be another 5 years. What's your take on
It's funny, and at the same time, it makes my head hurt, because this is the same guy that's saying like no more fracking and all this sort of thing, and then he rolled it back and said, "Oh no, I meant no more fracking on federal land," and
Yep.
then so on and so forth. I mean, look, I guess the positives are that at least there is a plan in terms of increasing or sustaining production over the next 5 years. I think that it's all playing out in terms of things that you and I have spoken about before, where the production will come from offshore. We've seen the Permian start to become really, really gassy, and we had a recent sell-off because people mistakenly, in my view, see the US production as surprising to the upside. There are a few tricks to that. Firstly, is that the production has been boosted by a lot of the small private players in the US looking to make their numbers look good so that they can sell their businesses. So that's one point. Another point is that you got to love the IEA. They changed their accounting depending on what they want to see. So I believe that there were like natural gas liquids being counted in the liquids component of production, and it's just like that's not oil as such. But anyway, if this goes ahead, I think it needs to go ahead. Actually, I think that we're really going to hit this crisis point. We're getting closer and closer to this crisis point where the oil market starts to go into a steep deficit. And if you've got to ask yourself, well, we've been saying this for probably 2 years. We got very, very close. And then what happened? Well, we had the SPR release, and then we had Iranian oil being allowed to be illegally sold onto the market. And what's left? That's what we've got to ask ourselves. Like, there are no more bullets that I can see in the chamber.
What about Venezuelan oil?
Yeah, that's not going to come online anytime soon. It's not that they don't have the oil; they've got lots of oil there. But you need to have everything up to date, like equipment and drilling facilities and the engineering prowess to get the thing out of the ground. Then we've got to talk about, this is what we probably should talk about. You've got to get that crude to the refineries, and this is really one thing that's people have got to understand, is you've got to move a lot of the crude oil to refineries in India and China, because we have underinvested in our refining capacity. And how do you do that? Well, you do it by tankers, and we've got a group of lads in Yemen that seem pretty keen on shooting down ships that are floating through there. So we've seen global shipping routes completely disrupted Offshore, in terms of production, is where it's at. That's where I've been camping out for a while now. So I think it's a good thing that they're doing it. I think it's weird that they keep changing their minds and in terms of policies just to pander to whoever. But I don't know. I guess that's politics, isn't it? What a
Yes, we're going into the election year, so they're gearing up, trying to get their buddies on their sides, right?
Yeah,
So,
it's interesting because normally they try and do everything they can to kind of pump up the stock market. Silver has an unusually good correlation in an election year. It starts to rise. I don't know why that is, but anyway, um, coincidence perhaps. And I think that normally you would expect these rate cuts to boost the stock market and the economy, and yet if you look historically, as soon as the Fed starts to cut, when they start to raise rates, you've got this 2-year lag, and then things start to get really, really, really volatile. There's a great chart on Twitter that Tubby Costa puts out where you can see the Fed changing from declining or flat rates when they raise, and you count sort of 2 years from there, and you see the VIX, the volatility index, absolutely spike. And so 23 has been the year of rate raises. Maybe 25, midway through 2025, we see some nasty stuff go down. Could be interesting.
yeah. I'm gonna jump over to the comments before we get into our predictions. So all I know is long live Petrobras.
Yes, sir. And a comment on that from Tony G. I agree completely. A comment on that is Petrobras is actually now one of my favorite ways to play the fertilizer complex. They're more than just an oil business. They've started to move into that space. Petrobras also will benefit from being a Brazilian company. If you look at the US dollar starting to roll over, as I mentioned, the US cutting rates, it makes it less attractive for people to invest in US bonds. And so where's that capital going to go? Well, in Brazil right now, you're getting a real yield, and sovereign bonds are paying close to 12% in an economy whose inflation's around 4%. So you're getting an 8% yield. I think that this is all happening right at the time where we're on the verge of a commodity boom, which Brazil obviously is a huge exporter of commodities. And you have Brazilian stocks being valued at low levels, at the lowest levels they've ever been compared to the US. So I agree with you, my man, Tony G. Long live Petrobras.
What do you think about Brazil joining the BRICS? And then also there was something about that. And then there's also this tension between Brazil and Argentina. Like what are your thoughts?
So it's an interesting relationship that Brazil has with Argentina. And Brazil has been part of the BRICS for a long time. They are an extremely powerful economic force that no one seems to pay any attention to. The issue with Brazil and Argentina at the moment is Brazil elected Lula, who's a self-identified communist. He's been the president before. He was impeached, then he was put in jail, and then he was taken out of jail again, and now he's in office. Whereas Argentina's now elected their first libertarian president, Javier Milei, my favorite politician of all time by far. And so you've got this kind of communism. It's a battle of ideology. So it's a battle of Lula being a communist and saying how bad Milei is because he's going to liberalize the Argentine economy. He and his ilk. So Lula, Maduro, the guy in Bolivia, whatever his name is, Pedro Castillo in Peru, they're all worried that if this really works and people will see how well it works in Argentina, already the free market's done wonders, then what are these guys going to do? They're going to be out of a job. People are going to be like, hey, we don't need you. So stop taking all our money via taxes.
Yeah.
So that's
the status quo. Disrupts the status quo for sure. Yeah, and I actually misspoke earlier. Brazil has been part of the BRICS for a long time. It was something that they made regarding like some of the BRICS agenda, or no, it was OPEC. They joined OPEC.
That's correct.
Yes. So
they're considering joining the cartel.
The voluntary cuts, or it was something about the voluntary cuts, or something like that. So I was like, this is going to be interesting. Brazil and OPEC now.
It will be. OPEC needs the price within a certain range, particularly Saudi. The Saudis need it in that sort of above 70, $75 a barrel. Brazil, no matter what at this stage, will become the fifth largest oil player in the world by 2030. And so there's the potential for some conflict there. Brazil have stated they want to be the guys that grow the production in a world where production growth is very scarce. OPEC have a heap of reserves. They don't want too much production growth if it were to lower the price, because then their agenda in terms of the Saudi economy transition over the next few decades starts to really suffer from that. So I'm guessing the potential is between those two interests. Brazil want to emerge as a production force, and Saudi want to keep production relatively stable, or stable enough so that they can maintain that price-bound range in oil.
Mm-hmm. Yeah, that makes total sense. So just jumping over to a couple of comments. Have either of you been looking into dry bulk? Order book is not as low as tankers, but the fleet is old. I've heard about dry bulk, but I have not looked deep into that or anything.
Yes, sir. So I can comment on this. You mentioned our worst financial decisions. It's not a financial decision of 2024, but one of the worst things I've ever done is invest in a Greek shipping company called Castor Maritime. It purported to be a dry bulk shipping company, and it made perfect sense on paper. This thing was trading at a massive discount, huge cash flows, upside, so on and so forth. The issue is the management had this little thing called an ATM, which is supposed to stand for an at-the-market facility. But I think they thought it was my own ATM, like I can just print myself money whenever I want and screw over the shareholders. So I do have experience in dry bulk. I currently have made back all those losses, thankfully. By complete luck, I invested in a company called Globus Maritime, another shipping shitco. And I made a lot of money on it this year, completely via luck. Okay. Anyway, dry bulk to me looks good. There are some legitimate plays in the dry bulk area. I think Genco is probably the main one, and I think that tankers are where it's at for me personally, and so I have more of an allocation towards tankers. But I agree, both of them look good. I would avoid the Greeks when it comes to shipping companies.
I understand that. Let's see. We got Tony G. Clearly, Biden wants to kneecap any new deep water exploration. I agree. He got to get his votes. I mean, we're in the clutch. We're in the clutch time. We're in the year. We're going into the year of the election. So definitely. And then my guy Denzel listening in. Appreciate you, bro. Everybody, be sure to hit the like button so that this video gets out more. Let's get the likes up. So I do want to talk about uranium as we transition. Unless you have any other comments on oil, we do have the. I saw this chart that Josh Young had posted about the International Energy Agency. He said the IEA again. So the IEA projected that we already pretty much reached peak oil. I'm assuming that is less than the 2019 peak, and actual demand in short-term forecasts it went higher than that. And so
yeah, they do this. They do this every year. Literally, they've done this every year for I think 10 years now, where they underestimate, or they project an underestimation of demand, and by the end of the year, the demand is higher than what they predicted, in inverted commas, and so then they have this upwards revision. And it happens. It literally happens almost every year over the last 10 years, with the exception of the COVID fiasco, obviously. Yeah. Same thing with coal. They're doing the same thing with coal, and as you and I have spoken about with a pod that we did with Rick Rule, by 2030, Chinese additional demand for coal as well will be the equivalent of adding another India, Russia, and like 4 or 5 different countries, their current demand by themselves. So expect them to be wrong on coal demand as well by the end of 2030.
Yeah. Okay. Yeah, that makes sense. I don't really trust their research or their work that they put out. And so I could definitely see how they got that wrong. If we jump over to uranium, this has been frustrating. This has been frustrating for some people, depending on where you got in at. I mean, we have uranium sitting at $91 a pound. I mean, it's it's sitting pretty nice, but the equities are not keeping up with the price. A lot of these equities are lagging behind. So, you got any thoughts on the uranium?
Yeah, certainly. So uranium, it's I'm gonna make a comparison to where I think silver might be right now. Now, we're not really steeply below the cost of production for silver, but we're at that point that you mentioned where it's been frustrating and everyone's wondering what the hell is going on. And that was the case for uranium for some time. Where were we in March this year with uranium price? I want to say we were in the 30s, somewhere like that. And
We've been above the 30s for a while.
just over 30,
Uranium
right?
was at about let's see, about $50,
Yeah.
53.
Yeah. So I remember having dinner with Justin Hune in Argentina. We met up there and we were talking about
He told me
how,
that too. He was recently on the show. He told me that y'all had met in Argentina.
yeah, it was the most bizarre kind of place where we had dinner. But anyway, that's another story. We were sitting there, and Justin was frustrated. He was getting a lot of crap, a lot of trolling comments on Twitter, and we would have to, because his wife was there. I didn't want to talk uranium because she found it super boring. So whenever she'd like go to the bathroom or whatever, we'd like cut straight to talking uranium, and and we're laying out the thesis and we're going back and forth, and I'm like, mate, like you're just early. Like this is gonna happen, and it's gonna be a complete moonshot. And so far, that's exactly what's happened. I think we're up 87% in terms of the spot commodity. I don't like most of the equities except for one, and I have recently sold out of my Denison exposure. I had a very unhealthy exposure to Denison, and so I'm looking to roll that into Global Atomic Corporation.
Oh man, you going to the riskiest of the risky, huh?
Taking a deep breath. Well, let's talk about that. How risky? Okay, yeah, it's perceived to be risky, but we just have no more pounds available to come online. And around the world, this is one project that is, if they get the rest of their financing, they just secured some of the funds. The only thing that was stopping them was the coup, right? And so they're expected to come into production probably not next year, but in 25. That coup now, the new government has been recognized by your government, the US. So what's really stopping these guys from coming into production? They have one of the best new greenfield mines in the world. The stock has been sold off, and I was selling options on this thing in the middle of the coup, and everyone was hating me. But I don't know. I think it's a case of things that don't get worse or can't get worse don't get worse, and things that can't get better probably don't get much better. And I think that they're on that right part of the Lassonde curve. They're getting ready to produce, and I think this could be a 10 bagger over a decade. I really do. Obviously, I can be wrong, so I'm not going to bet the house on it. But I think that the risk is more perceived now than real risk. That's just my personal take.
Gotcha. Yeah. Yeah, some of these uranium equities are definitely lagging. I think, well, for me, like I'm up 100% on majority of my positions. Next gen over 100%. Let's see.
We'll see. We'll see when they fire off their next capital raise. The only way to make money in next gen is to be on the board. Trust me.
And then let's see. I have Uranium Energy Corp. Up 100% on that one. And so are these going to go higher or what? Like, are they tapped out? Like, do they run out of gas in the tank or what, man?
I have my own views on Uranium Energy Corp. I don't know what I have to stick to what I do fundamentally. That seems to be a big narrative stock, and so who knows? I mean, if we get capital coming in, it might be the most popular stock, and the stock price may go through the roof. But it's currently discounting. It's discounting a very high uranium price in its stock value. Whereas I look at Global Atomic, it's only a year, maybe 2 years away from production. A few hurdles still, yes, but it's discounting like $50 uranium.
Yeah.
So
yeah, I think I'm gonna look into Global Atomic. So let's
that's
see.
the way that I look at things. Yeah.
Tony G said coal and nat gas in 2024. Can't convince myself to go Yan Coal over my man Phil Hodge at Pine Cliff Energy.
I avoid natural gas like the plague. I think it's very low. I think it could get lower. I think it's a good risk reward, but don't ask me about natural gas. I tend to follow the idea that I learned from Josh Young, where I look at oil. It's much easier for me to understand, and a lot of these oil producers, you can buy them and get their gas production for free. I just think that's a very smart way of looking at it. I like LNG. LNG is a different proposition. I've spoken about New Fortress Energy before, cool company, LNG tankers, so on and so forth. So I can't comment on natural gas as such. When it comes to coal, it's a layup. It's a layup. Like natural gas may be a 3-pointer, but coal's an absolute layup, in my opinion.
Gotcha.
And I love young coal.
Yeah, I haven't been in natural gas for a little while. I've actually sold off my positions there. I haven't looked into coal. Well, I've looked into coal, but I haven't done any deep research. I got to go watch some of your videos on some of these coal companies. I was in
one on young coal.
Yeah. I was in Peabody for a little while. And Peabody, I kind of have a love-hate relationship with myself over because I was buying them at $3. And I didn't know what I had in my hand. So
none of us did, mate. Well, I didn't. Yeah.
Yep. So it's I got to do some more digging on coal and to understand more of that. Let's see. Met or thermal? Any preference?
It's a very, very good question. I was about to start on that. So met or thermal? Gee, it's a great question. So thermal coal is used for heating electrical generation, for those of you who are unfamiliar. Met coal, generally speaking, is used for steel production, industrial processes, cement making and so forth. So met coal is deemed to be a bit more on the economy. So if you have a construction boom, there'll be a large demand for steel, let's say. And so in a lot of places around the world, that means an increase in met coal. Met coal sells for a lot more than thermal coal. Okay, so thermal coal is just it's much cheaper, and that's why places like Indonesia, India, and so forth around the world use thermal coal for their electricity production. Met coal will have more volatility, so higher and lower spikes. Thermal coal will be just this kind of stable chugging along. I still think thermal. I've been more bullish on thermal in the past than met until last year, where I changed on that. I think that thermal coal is a better bet longer term, and the reason is, as I understand it, there are some processes happening that instead of having a coal blast furnace to make steel, various companies around the world are looking at changing that, where they can make steel without so much met coal. I don't know when or if that's going to happen. I just know that it's being talked about. So I would say probably thermal for a longer term, but met coal are probably where the margins are, and that's why you saw down here Whitehaven Coal have transitioned from being a thermal coal company to a met coal company because they want to get access to the high prices and margins in met coal. So,
Yeah, totally
yeah.
understandable. So let's go ahead and transition to worst financial decisions we've made in 2023. All right. This can be stocks, it can be whatever asset you wish to share about. And so appreciate you for asking the question, Classical. Um, glad Ben could be here to answer that question. So I guess I'll start with this one. I would say I changed it from I changed it from choices to decisions because like I think that I've shared this multiple times. One financial decision was me trying to store value in other areas. Right, I had some money I made. I tried to transition, like, okay, let me take some money from here and store it in another asset. So I started getting into these sports trading cards. And I was in at the top, man. I was in at the top, and I started buying some of these cards, autographed rookie cards, and I'm like trying to play this game of speculating which rookie's going to do the best and everything. And it was something I didn't understand fully. I had a gentleman by the name of Troy Reich come on, and he used to play at Wake Forest with no, was it Wake Forest? Yeah, I think Wake Forest. He played with John Collins or whatnot. But he came on the channel and he talked about the trading card industry and how he's getting involved and stuff like that. And so, I just went in buying stuff and I lost a lot of value on many of those cards. I can't even sell them for what I bought them for and such. And so that I chopped that one up as a loss. So the moral of the story is that if you don't understand something, don't just think that you can go in and like just because you watch basketball on TV doesn't mean you can go in and be a Steph Curry. That doesn't mean you're going to go in and be a LeBron James. Like you have to know the game. You have to have a basketball IQ. You have to practice the skills. You have to all this stuff, right? Don't just jump in thinking that you know what you're getting into. So that's the moral of that story. And then I have a story on the other side of it was I was getting too bearish on certain assets. And so when we look at cryptocurrencies, right, which I'm going to share screen, I was, I'm part of the bear camp, like I just had to admit that, right? I'm part of the bear camp. And whenever I'm part of that camp, I'm just really, thinking like, oh, everything's gonna crash. You listen to all these voices and everything, and I kept waiting for things to go lower, right? So, for example, this company here, Mara, they do Bitcoin. They're a Bitcoin mining and asset company. So, anyways, last year we had a sell off, and then we had a tax harvesting. I was buying them at about $3 a share, accumulating them. And then I sold them off for like a little mini profit, I think at like $7. I mean, they hit over $30 this last week.
Oh,
wow. So, I'm kind of kicking myself for that. It's like, man, like, I could have held that asset. Like I didn't have to sell that asset, but I was just too bearish thinking like, oh, it's going to go lower. These stocks are going to go lower. Same thing happened with Meta. Meta, I was buying them down to $90, right? Down here. Again, so, I was buying them October of last year, sold them off early, now they're sitting at $353. So, there's such thing as getting too bearish and getting into these echo chambers to where you're like, if you don't listen to other voices or listen to the other side of the coin or look at the other side of the coin, you can miss out on many, many opportunities. And so those were two of my worst financial decisions this past year.
Okay. So it's more an opportunity cost. So if the mistake was selling out too early or being too bearish rather than sticking with your conviction.
Yeah, selling out too early, being too bearish, and then also getting into something that I didn't fully understand. That was with the sports trading cards.
Yeah. Okay. Fair enough. But I imagine that was only a kind of a speculation for you, like a bit of fun. To see what
Yeah,
would happen.
it was a bit of fun. I mean, I could have used that capital to put towards an asset that I know would have went up, like gold, right? Uh, or put in some of these crypto coins or whatever, right? And so like, or oil, or when we had the oil boom,
Mhm.
like I could have used that money, that capital, other places, and so um, that was part of that. And also, I mean, another one, right? I bought a Bitcoin miner. I bought a Bitcoin
Yeah.
miner in I bought it in what was it, December of last year. So I'm like, yeah, it's gonna go higher. And this was during that time everybody was pumping up Bitcoin, and the Fed had came out and said that, what's going on, JT? Good to see you, bro. Appreciate you chiming in. Be sure to hit that like button, you all, if you haven't liked the video yet. But I was buying I bought a Bitcoin miner, and this was like me just, okay, let me try to diversify and all
Mhm.
this stuff, right? And people were pumping Bitcoin up. They were like, oh yeah, it's going to 100,000, and so it hit 68, right? I think it hit 68,000 or something like that. But people were pumping this, right? So then
Yeah.
the Fed came out and said, we're going to start raising interest rates, all this stuff, right? We had a little bit of a sell off, and well, quite a bit of a sell off. But I think I bought my miner when Bitcoin was around 50,000. So the miners are priced based on the price of Bitcoin.
Mhm.
So I bought like a secondhand miner for like $6,000, and I was like, okay, this will work. I allowed the people that sold it to me, convinced me to get into it and all this stuff. They were saying all the things that were music to my ears. And then the price just collapsed, right? I mean, Bitcoin goes down to 16,000, and so then um, actually I bought that miner back in 2021. So that wasn't last year. That was 2021. So
Mhm.
anyways, I didn't make my profit. I didn't make a profit. I didn't even make the money back. I probably made 2 grand out of that 6 grand back. And so and I could have bought like brand new miners that were like um way more efficient and all of that. When Bitcoin was at 16,000, I could have bought those at $2,000. So I could have had 3 brand new miners for $2,000. But I
Instead of
bought a used miner for $6,000, and I didn't make my money back. So that was that was all bad.
I've done similar things. Don't worry, not in crypto, but I've done some things like that. I look back and like, oh, what
Yeah,
was I
that was
thinking?
bad. So yeah. So go ahead. You got the floor.
Okay, so worst decisions for 2023. Uh, the mistakes were made of not going heavily enough when I had identified real opportunity. So it's kind of an error of omission, as Uncle Rick would call it.
Mhm.
So seeing like I was pounding the table on Ecopetrol and Petrobras in March. I remember I was doing a video to my subscribers in Mexico, and I invested a lot of money and did really well. So I've had a great year this year. But where the performance could have been better is being even more concentrated and having higher convictions. So this is the difference between me this year and last year, which I didn't have a great year because I was trying to, as you said, I was listening to too many different people saying, "Oh, you need to diversify," and so I had lots of positions. I found it hard to keep track of those positions. This year, I've had less than half of the positions that I had, and I've significantly outperformed where I was. And if you look, and there's a great book that you should read called The Art of Execution by Lee Freeman Shaw. The guys that do really well in the market, one thing they all have is they have a couple of really big winners that they let ride. And so I've been better at that this year than I have in the past, but that's still where I need to improve coming into 2024 for sure.
Yeah. Yeah. And what were the so you wish that you would have loaded the boat on Echo Patrol and Petrobras,
Yeah,
or
yeah. I mean, they're already like 15% weightings for me. Or at one time they were getting up higher, but honestly, I'm the type of personality. I've realized that I have no problem holding a 5 stock portfolio. And if it's
Mhm.
doing this, and if you'll see in my eToro portfolio, the performance where I had, I think, 4 or 5 months in a row that were sort of break even to down. Yeah, so I'm just looking right now. So 4 months in a row where I had small losses, 3.5, da da da, and then I've had 1, 2, 3 months where I've had 9.5, 10% monthly gains to finish the year close to 40%. And I think that's a more realistic way of looking at things, that you're gonna have volatility, take advantage of that. And so I think I disagree a lot in terms of, as a retail investor, if I'm going to try and actively manage my money, then when I see that opportunity, I need to absolutely fully capitalize on it, because there are going to be plenty of years where it's going to be hard for retail. And so, yeah, that's the worst decision for me, was being a little bit timid.
Mhm. Yeah. So Tony G posted a good quote. As Charlie Munger would say, never interrupt compounding unnecessarily.
Yes,
Yep.
sir.
So yeah, that's true. I mean, especially with the recent dividend payout from Echo Patrol, that dividend payout was nice.
It's a beautiful thing, and as I've spoken about with some of the viewers on my channel, I kind of had this realization, like why do I own anything else in the sector? You've got these two fully vertically integrated state behemoths that are paying you ridiculous yields. They're ridiculously cheap on any valuation metric. Why do you need to go out on a limb into some of these other more speculative plays? I could have, almost all my portfolio in these 3 names, and they would pay me like CEO salaries worth of dividends every year.
Yeah.
And so I kind of had that face palm moment where I'm like, okay, Ben, seriously, like
So
just
what
stop
what
messing
was the?
around.
I'm trying to figure out the actual dividend because I'm getting different. You get different reports from different sites. So one of the
Yep.
sites I was on was like, "Oh, Echo Patrol is issuing a 15 cents dividend," and I was like, "Dang, that isn't
Okay.
nothing really." But then when I saw in my actual account, like I had another um, a dividend issuance that was like I was able to get a few shares, from how many
Yep.
shares I had, and so I was kind of wondering, like, how does that play out? Like, what is the actual dividend that they issued?
Okay. So
7% or?
great question, because it can be confusing. What you've got to understand is, if you're being quoted the dividend per share, you need to multiply that by 20, because if you're I assume you're investing in the ADRs, the American Depository Receipts.
Hmm.
One ADR equals 20 Ecopetrol shares. And so it's easy to get confused. So that's that. I believe
Or
overall this
when you said
year,
times 20.
yeah. So if you look on Twitter, August Wilson is the guy for this. He just like completely breaks it all down and puts it into an ADR format, so you can see how many dollars per ADR. This year, I believe it's over the $2 mark per share, per ADR, excuse me. So be careful with that, and be careful with remember that the currency will fluctuate. So that will be revised closer to the dividend date. And so this is another reason why I'm very bullish emerging markets next year, because if the US dollar rolls over, the Colombian peso, for instance, will relatively strengthen, and so your dividend is going to do really, really well.
Hmm. And so are you still in so when you're looking at Brazil, are you mostly in the preferred or the common shares?
Good question. So I'm in the preferred shares for Petrobras because they're just cheaper, so I get a better yield. The options market is better for the common shares.
Mhm.
So there's that aspect. Yeah.
Gotcha. All right.
So
So,
$2. Excuse me, sorry to
but
interrupt. $2.09 per ADR this year is what Ticker Terminal is telling me the final valuation for the dividend is for Ecopetrol,
okay,
which is
nice.
a monster yield, absolute monster yield.
Yeah, it was because the Petrobras yield wasn't really that much, like compared to when I had the Echo Patrol. Like it seemed like it was a lot more. So we got a
Yeah,
question. Do you still like the STX short?
so okay, yeah, I got to answer that. The Petrobras is still yielding in the teens. So I mean, come on,
Yeah.
that's great. Do I still like the STX short? The answer is yes. I don't understand. There's been nothing new happen to change my thesis on that. So Marty, yeah, I still like the short. I don't know if they'll go bankrupt next year. Excuse me, by January 2025, but I've got the option to roll some of those bankruptcy puts further and further. I think that the QQQ this year, it started the year overvalued, and it's just gone up another like 30 or 40%. So it's been pretty crazy in tech land. It can't last forever. I don't know how long it will last, but I think that the weakest players, when we start to see ETF redemptions, so instead of people coming in buying ETFs and then the ETF just buying whatever is in the sector, regardless of fundamentals, as soon as that stops, guess what happens? They then become the marginal seller. And to whom are they going to sell these shares at 30, 40, 50, 60 times earnings? Or in the case of Seagate, it's like they don't have any earnings. So it's over 90 times the previous year's earnings. So I think that, yeah, I do like the Seagate short still.
Yeah, and you mentioned when I had watched the video you did on the short, you mentioned that this was it was like speculative, but it wasn't like, but it was like informed at the same time. Like
Yeah.
you're like, I'm not going out risking a bunch of money. Like, oh, this is 100% gonna happen. Or I mean, you don't do that with anything, but like, I knew you
No.
kind of gave like some type of disclaimer, before putting that out.
Absolutely. And it's more about the timing than anything else. So
Yeah.
unfortunately, it's not as simple as recognizing a really overvalued company, putting a short position on in the various ways that you can do that, and then just sitting back and waiting for the market to revert. In the meantime, you can see some crazy things happen. And so it's about the timing. The company has somehow managed to redefine and refinance its debt 10 times. It's insolvent. It's breaking all the covenants on its debt, and it's not making any money. It's it's losing money hand over fist. So we'll see. I don't see that changing. I just think it takes a number of catalysts. One will be the announcement of them having to cut their dividend. That hasn't happened by Q4, but I think that Q1 next year, I do not see how they can continue this game going. They will be
Yeah.
they just won't have the cash, and so they'll have to cut the dividend. When they do that, they will be expelled from all the funds that all the institutional money that buys this based on the dividend. They won't be allowed to buy the stock anymore, so they'll dump that, and then potentially they'll be dumped out of the Nasdaq as well. So you can see how I don't know when that will occur. I really strongly believe it will. When it happens, it's going to be like the inverse of silver. Like it does nothing and then it goes through the roof. Well, this is like does nothing and then it's going to go to the floor. That's my thesis.
It's like one of those cartoons when they run off the cliff and then they just fall down. Yeah.
Exactly that.
Gotcha. All right, so let's go ahead and transition to 2024 predictions.
Mhm.
As we're approaching a new year and everything, I want to get your prediction on what do you see the global economy? Where do you see particular what assets do you see outperforming? And What do you see the Fed doing? What do you see? You have any prediction on the elections and how this is all going to play out? There's a lot of things to consider, geopolitics, everything. So if you were to give like a macro view on what do you think is going to happen and which assets will outperform, what's your take?
Certainly. So I've got a few little points here that I put together based on you asking me that question earlier in the week. Let's start in the US. So you got an election, you got the Fed, and that basically dictates what happens in the short term because that dictates liquidity. I think that probably Q1 is a bull run continues in the stock market, and then the reason I say that is that there won't be any rate hikes until we get to around the end of February, March, where it'll be interesting to see what happens with the repo market. If liquidity starts to dry up, and I'm not an expert on the repo market, you should look at getting like Alfonso Pecatello on your channel. He'd be great to talk to.
Mhm.
If that liquidity dries up, I think you could see a rapid sell-off in stocks, maybe Q2, maybe Q3. And then I think we all know what happens then. If people start to panic, the Fed will then come to the rescue and cut rates.
Yeah.
So that's my base case for the Fed. I think that will lead to emerging markets doing well. I think there'll be less demand for US bonds because the Fed will bid them up and the yield will lower. So that capital will flow in towards emerging markets. US stocks versus the rest of the world are like at all-time highs. So I think that also gives credence to what I'm saying there. And I think that you will see currency strengthening in Brazil, Mexico, and Colombia. So some of the stocks that I own there, I expect to do well. Gold and silver, I think, will also accelerate to the upside for exactly the same reasons. And I think we see some rotation out of the tech sector into some of these energy stocks. I don't know if energy stocks will go through the roof as such, but I think that you'll start to see capital flowing away from these overvalued tech and into some of the hard assets.
Gotcha. So I'm a little bit bearish. I'm probably more bullish than bearish, I would say. And I would say that because obviously, the Fed cutting rates, they usually cut when there's some type of crisis. I mean, they're already projecting cuts now. And within that, I just think that like the Democratic Party cannot have a market crash on their watch, like while they're in office. That will just be. I think it's gonna. I think it's gonna get very political. I think it's gonna get very political. Somehow they're gonna kick this can down the road, and then after the election, then we'll see we'll see how if the coyote runs off the cliff at that point. But I just don't see it like like there's so much on the line for each party. In terms of, obviously just their ideologies and everything, but it just seems like, I mean, you got all this stuff with Trump coming back, trying to come back, and you got all this stuff with the Supreme Court needing to like approve him to be able to run and get on the ballot, right? It's just so much on the line, right? And if they have a market crash, man, like it's gonna be just all bad. And so but then you see like that's just like my thoughts on it, but then you see like the repo market being drained, that's keeping liquidity there. I mean, the Fed's still tightening, they're not buying government debt. The Treasury's issuing more treasury bills, T-bills and such, and so you're seeing that dynamic too. But it's kind of, I just don't think that they will allow a market crash to happen on their watch. But I'm also not gonna bet my portfolio on that though.
No, I agree with you. I think that there could be a nasty sell-off. There could be a 30 to 40% sell-off in the broad equities. And this is interesting as well, because where you and I tend to play, the valuations are already pretty low. So if you were to see the S&P or the NASDAQ sell off 30%, I don't know how much that would affect my personal stock holdings. They'll go down a little bit just because, it'd be a broad sell-off.
Yeah.
But what I'm going to do then is I'm going to get lower and lower entry prices. Do you think so? It's definitely going to be Trump is the Republican candidate. You don't see anyone else that can challenge him as the
He's the most talked about. I would say that.
Who's his running mate going to be?
Yeah, it's a lot of right now. It's just very political. Like, you got the weaponization of the justice system. You got everything in the power of the Democratic Party to like prevent like him from getting on the ballot. There there's all this stuff, right? So there's a lot riding on the vote. There's a lot riding on the vote, and for so I just don't see Powell being in office if a crash happens on Powell's watch. Will he get reappointed? Especially if the Democratic Party wins, right? You know what I'm saying? Like there's like I don't know. I just kind of see like it's going to get very political, and I think that the political nature of these games that they're playing is going to dictate like what happens, and if I mean if they're going to pretty much I don't know, man. It's kind of like when it gets like this political, like things just change. Like our thesis won't change, but like you have to adjust for like, oh well, we didn't know this was gonna happen. So like every time I see like the very bearish views, like I listen to Felix Zulauf, Peter Schiff, Simon Hunt, many that are predicting like we're gonna have like a nasty recession, even a depression, all these things. Like it just always seems like there's something political or whatever that gets in the way and pretty much delays their thesis even longer. And so it's kind of that's kind of where I'm stuck.
No, I agree. You're anticipating the political reaction to what should happen fundamentally. So I mean, things are way overvalued, and we would expect rates should be higher. That's not going to happen. And so, yeah, if it plays out the way we're thinking, where, okay, you have a little bit of volatility, but then the Fed comes to the rescue and cuts rates, and you get political spending because both parties are trying to buy the votes for the election, essentially. Nominally, things will stay afloat, but I think you'll see inflation come back with a vengeance. So you can have the stock market going up, everything going up, but a depression in earnings because it's all inflation. The gains are nominal as opposed to real. And I think in the Western world, that's exactly what's going to happen over the next decade. We've already seen this in a lot of cases. Hence why position in commodities, particularly energy.
Yeah, for real. And I think that even with all of this, like, obviously, I was suspecting it to be a crash, and then I kind of changed my view a little bit to play for some contingencies. So I am into some risk assets, hence the crypto, but I'm also not investing like a life-changing amount of money there. And I know that it could potentially go lower. There's the last two crypto bull markets, Bitcoin would sell off significantly before it makes its big rise. And that's based off like the halving cycle and all of this stuff, right? But so there's definitely potential, like because the halving cycle starts in March, April. And just like you remember 2020, March 2020, right? Bitcoin sold off and went down to $3,000, right? And then it started a bull run, along with gold as well. So it's kind of interesting. I'm trying to play it as safe as possible, trying to plan for all types of outcomes.
Do you have any short positions?
No, I suck at shorting, man. I lose money every time I do any type of shorting
it's a real art to it. But I guess inherently, one thing I learned, obviously, we don't know exactly what's going to happen when it's going to happen. The beauty of if you've got a good short position where you can have a very small amount of your portfolio there, most of your portfolio will benefit in a bull market. But if you have a good short position, you do get volatility event. That thing can, if it can be a multi-bagger on your position. So if you've got, let's say, 3% of your portfolio in the short position, 5% whatever. A 5% short position, if it's a 10-bagger on a 30% drop in the market, you've got 50% worth of your previous portfolio there ready to redeploy at a much lower rate. So it's an insurance policy, but it's something to think about as a nice hedge, I suppose. And I'm hoping that Seagate will do that for me.
Yeah,
Well,
definitely.
stop buying their products, people listening to this. No, I'm just kidding.
Yeah, I think the because I've played around with the VIX and like the
the VIX. The VIX is asleep right now. It's asleep.
Yeah, and it's so I've lost money on the VIX, and that was mostly because of like my bearish view in what the last couple of years of money printing and stuff. And so I mean, and then even like the other aspect of this is like most stocks are way off their all-time highs. Like, so if you look at like some of these tech companies like PayPal, for example, like they haven't even recovered from their blow off top, right?
That's interesting.
So but then you got this Magnificent Seven, that's holding the markets up, holding these indices up, and you got these indices get hitting all-time highs and stuff. Like it's kind of just like, okay, well, like it hasn't been this low since pre-pandemic, right? I mean, this is lower than the pandemic lows, right? And so
is that accounting for share dilutions though?
Probably not.
Yeah, so I don't know how much that would make a difference in the case of PayPal. But exactly what you said, the Magnificent Seven is really the Magnificent Two. I think Apple and Microsoft make up nearly 30% or 24% of every dollar invested in the Nasdaq. I mean, it's insane. So I don't know.
Yeah, so and that's kind of like my other, like what I've been listening to, because some people are saying like we're already in recession, like, and the data's going to come out later and they're like, oh, look back, like, oh yeah, we were in a recession. We had a big drawdown here in 2022. We had a big draw, so I don't know, man. It's kind of like I'm trying to just play it safe on all ends. Except for
good luck with that.
Except for crypto. I'm trying to get 1,000 bagger.
Yeah, well, it could happen. It could happen. I hope it happens for you.
Yeah, I hope so too, man. Well, yeah, man. Appreciate you joining today and everything. Good to catch up and everything. So I'm sure we'll see each other soon. And audience, appreciate you all for tuning in. Be sure to hit the like button. Subscribe to Ben's channel if you have not checked out his channel yet. He's been on my channel multiple times. So be sure to hit the subscribe button there. Consider subscribing to mine if you are viewing in on Ben's channel. So I appreciate you all, and I hope you all have a happy new year.
Thank you very much for having me, guys. Happy New Year. See you in 2024.